Good morning all and welcome to this morning's video. So this morning I have 4 pairs on watch, and those are dollar Swiss, sugar USD, euro Aussie and pound Aussie. So my favorite of the bunch at this moment in time is dollar Swiss. Of course, a lot can change in trading, easy for me to say, but at this moment in time this is the order in which I prefer these pairs for a multitude of reasons. So on the higher time frames, dollar Swiss, we have this low here. Okay, we have a very sharp move. Okay, an incredibly sharp move there, followed by a sharp move up. This might be easier for me to show you on the weekly chart. In this instance, very sharp move. The sharp moves tend to be where the liquidity is. Okay, and we get early signs of that by way of this structure here. Okay, so we have this structure here. We have the first drive there, second drive. The second drive is usually the more corrective one, and we can see that here. Okay, but then price comes down to gravitate towards the more attractive area of value, which is this one here. It stands out more and it's sharp. Okay, what happens? We get a little bit of a FOMO move here, so we have a similar thing. First drive, not so much a structure, but we have a first drive, second drive, and then a third drive, which just so happens to line up with the outer structure. We then tap the area of value and then push up very impulsively. So I'm not surprised by that at all. I do note the fact that we didn't break below it. Okay, so we just literally just tap below it, usually with an area of value which is as significant as this. Usually we would break below, catch people the wrong side of the market, and then push up, and we literally only just tapped it this time. But as I always say, nothing happens all of the time and nothing happens none of the time. It's about stacking the confluences, not about perfection. Okay, so what happens? We get the impulsive push up, and you can see, if I just drill down to the daily chart, you can see that we're moving up by way of a series of impulses and corrections, which is the natural ebb and flow of the market. Okay, a little bit of a pullback there, correction. Okay, we break out of that. Usually we get these tighter corrections on the break, or on the edge of the structure, because the volume has already been built up here, so price doesn't need to consolidate for as long. We push out of that impulsively. You can then see, if I just speed up a little bit because I've got 4 pairs to get through, we then have the what we typically see. We have these 1, 2, 3. Each time we near miss the base of this structure where volume was built, okay, we tap just below, wash out all the liquidity that was sat there, and then push up impulsively. Okay, what I like about this now is not only have we tapped out all of that liquidity, most likely, or enough of the liquidity, we don't always have to tap all of it to push up, but we're also now trading above here. We're trading above this consolidation, and this looks very clear to me for an impulse correction continuation to push higher to take out this high, which this high near missed too. Okay, so it's the same psychology over and over again, repeating itself since data actually began. Obviously it's a little bit more advanced these days, but these psychological patterns have repeated themselves since charts and chart patterns existed. Okay, so we have this structure here. We have a base. Okay, I was actually previously looking for a risk entry from the edge, so I was looking for a 1, 2, 3, which lined up with that. However, in the middle of the night, which is not when I would place a trade on dollar Swiss because it's out of session, we broke below. So what I'm anticipating at this moment in time is a push back up. Okay, so I'm anticipating, let's just get that off the chart. I'm anticipating at this moment in time, or what I'm looking for rather, is I'm looking for an impulsive move back up, back above this area of value. So potentially catching people the wrong side of the market. And then I'll be looking for a 2-touch 5-minute continuation. I see no reason whatsoever to wait for more than that. Okay, because we're in a phenomenal area. We've got nothing below here to worry about. So I'd be quite happy taking a 1-hour push up, a 5-minute continuation as a minimum. And then I would look to get long either on the break or within the flag. If we got a 15-minute continuation, great. That would be a bit more deliberacy. Not that we need it in this instance. Okay, and then I would look for, as I've said here, in this instance, I would look for a 5-minute risk entry within the flag if this was to occur. And once again, I'd have an order set on the break whilst waiting for the risk entry to shape up, and then I would take whichever one shaped up, okay, and cancel the reduced risk order on the break if I managed to get the risk entry within the flag. We also have, just to touch on it, I don't use trend lines, as I was saying to someone, unless I'm actually looking for a risk entry from the edge, because typically they cause more confusion than they give clarity. Okay, so we have this kind of this 1, 2, 3 touch structure there. We have a middle section within that. Okay, what I also like about this, and what I think makes this more likely to push up above here, is that we also have a 1, 2, 3 wave there, where if we just measure it, okay, the impulses are of a similar length, suggesting that this is a completed move, that this is a completed structure, and that increases the likelihood of price breaking back above the area of value. A lot of people may be thinking this is getting short. It may well get short. It may well go short. If it does, I'll just leave this alone. Okay, trading is not about being right. It's about having a plan, executing it, and being able to manage your risk. Okay, so I have an alert set just above the area of value. If that does not trigger, then price cannot, by definition, have broken back above the area of value. So that's what I'm looking for from dollar Swiss. So I'm going to move on to what is next on my list, which is sugar USD. Now, as I said to someone, the same person I was talking about a minute ago, you're always learning in trading. And one thing I learned yesterday is that it would appear that on a bank holiday, some of these commodities don't actually move. As you can see here, it last moved on Friday. So it would appear that sugar, even though I had this on watch yesterday, was closed. I don't trade commodities all that often, so I was unaware that it was actually closed, but no harm done. As I said, you're always learning. So if I just zoom out, sugar, we had a high here, and we had a high here, which this high near missed too. Okay, now which one in my eyes is the most attractive? Well, we have a sharp move up here, so potentially that's attractive. But look what price did when it got to this low. It consolidated down below it. Okay, whereas with this one, there was a lot of volume built, and when price sold off, it sold off very aggressively. But more importantly, it broke through this low here, and not only did it just break through a low, it broke through a very sharp low. So there must have been a high exchange of liquidity here. Okay, I would have thought higher than this one because of those factors which I've just explained, and that perhaps explained why when price got to this area, when it got to this area, it just smashed through it without respecting it, whereas when it got to this area, it actually sold off from that area. Okay, so that probably explains to a large extent why price gravitated once again to the more attractive area of value. I know, I'm actually friends with someone who's a very savvy businessman, but a lot of business people, even business people, when they get in front of a charts, they're not thinking of trading like a business. Okay, price is always seeking the more attractive area of value, just like investors are always seeking, and businesses are always seeking the most attractive area of value and the best price. Okay, that's exactly what's happening on the markets. So if we just look at how price responded from this area, so this is nature theory. We're not just looking, those of us who trade the Falcon strategy, we're not just looking at if price has moved, we're looking at how it has moved. Okay, and when we got to this area, we moved down a lot more correctively than we moved up. Okay, impulse, correction, continuation. That's usually the ebb and flow of the market, and that's exactly what happened. So why are we doing that? Likely because there's still orders up here which need to be filled before price can move to the downside. So what happens? We do tap into the area, but we've already tapped into that. So we've already washed out a lot of the liquidity that was there. Of course, more orders could have been placed in the meantime while this was forming, but we've just reached the same area and we wicked to it and not through it. So what happens? Usually when we wick to an area and not through it, we tap above and then we see the move to the downside like that. And that's exactly what happened as well. Okay. As I said previously, this could have been, because of how it had fallen, this could have been a reversal structure to push up, because we had the first drive, second drive, third drive, and we had a sharp move there. Okay, but notably one that didn't break through that high. But what price did instead, okay, is it's consolidated, and you'll see this on as I drill down. It's consolidated underneath this low, suggesting to me that this is just an impulse correction continuation to push lower to take out this low, because this low was the base of this structure, okay, where volume was built. So you can see that a bit more clearly as I drill down. You can see price left the footprint there, which just so happens to be the retest at the back end of that. Okay, so that is likely where price will gravitate back towards. We also have an element of that 1, 2, 3. Okay, one, first drive, second drive, the more corrective middle section. Okay, what I call the FOMO channel, because the people are trying to sell it whilst the orders that are up here and being placed in the area are dragging price up, which will likely cause price to gravitate back towards that area. And if it does, what I'll be looking for, I'm having to speed up because I've spoken a bit too long already. What I'll be looking for in this instance, just because we're a bit further down in the run, okay, this is not where I would take an independent 5-minute flag, just because of how far into this run we are. So what I'll be looking for, I'll be looking for a tap into this area, a 1 hour impulse down, and then the 2-touch 15-minute continuation, and then I would set an entry on the break. And after we got the two bottoms, I would wait for price to push back up. And if we tap the first high again, I would look for an entry from here and cancel the original order. And if we didn't push all the way up to here, I would just let this order trigger me in. So I've got an alert set just above the area of value. And that is what I like about this, is you don't even have to drill down to the 1 hour to actually see the structure, because it's visible on multiple time frames, which is a positive confluence factor in my experience. So Euro Aussie, you can see a bit of a range here, okay? But if we just drill down a little bit, or you can see it here, what you can see is this is potentially a little range play, because you have we have this here, and I've literally just noticed this on the fly. What happens? We come down, but we wick to the area and not through it. So price will likely gravitate back towards that low. Okay. Also, we have, you can see here, without me even drilling down, we have a near miss to this high. Okay. We kind of have this high, which breaks above the first touch, but near misses to the area of value. This one breaks above, washes out all the orders, and then pushes to the downside. And you can see that we kind of have that evening star formation there. Okay, we get a bit of a wick, so we get this nice daily close, but with a bit of a wick underneath it. Usually when we have a bit of a wick, price consolidates sideways for a period of time. You can see that's happening now. Okay, so I am mindful of the fact that we do have a little bit of consolidation just sat above this high, but we've pushed down with aggression, suggesting at this moment in time the price doesn't need to gravitate back towards here to find liquidity to move to the downside. What I also like about this is that we are, another clue that price doesn't need to do that, is that we're consolidating underneath this low, okay, where volume was built. Okay, so at this moment in time, of course, things can change. This just looks like an impulse correction continuation to push lower. And if we were to measure that, that would actually take us down to there. Okay, impulse correction continuation, that would take us down to there. So that makes contextual sense as well. So what I'm looking for, when we've had a series of corrections like this, so I haven't managed to get any entries in here. There was no entries that I was in a position to take. What I'll be looking for is a 3-touch 1 hour continuation, or a 2-touch 1 hour continuation with a 3-touch structural approach. So if we got 3 high, so we've got the little so if we got this, either what I've just drawn, or we got something like that. That's what I mean by a 3-touch structural approach. If we got that, then I would look to get short from the top, and then that would give me a risk to reward of about, if we just measured, so where this impulsive leg started, okay, and we measure it on the break, because the volume that's been built up within there can dictate how far we go, how far we move to the downside. That would take us down to that low, so I'll be able to manage that for something in the region of 6%, and then I would be targeting that low there, okay, and I would mechanically manage this down to the area for about 9%, but I would measure from the range, so that would be there to there, and I would set the take profit down there. So it would be just just below there, and that would be about 7.5%, and I would trail my stop loss accordingly at the same time. Okay, so that is Euro Aussie. I'm on pound Aussie. I'm actually looking for a trade in the other direction, and you might be thinking, well, that doesn't make sense because the euro and the pound move in alignment with each other. Well, sometimes you can do that if you're kind of playing the strength or the weakness of the euro or the pound, for example. Not necessarily, because sometimes the pound can be particularly strong across the board or particularly weak, and the same applies to the euro and all currency pairs. Okay, so I'll just touch on that. Sometimes it's good just to trade the structure and to not try and factor in too many variables. And sometimes when the structure is very, very clear, it makes sense to do that. Okay, and in this instance, we have a near miss to this low. Okay, on the daily chart. But what's happened? So we have a potential impulse correction continuation, and it would make contextual sense for price to do that because we have this. Okay, we have this structure that would be parallel. This would be the middle section. So this impulse that you see here could be an impulse correction continuation to push higher to complete that structure. So I'm not worried because of that, not overly worried, I should say, at the fact that we haven't really reacted from here. So this is a bit of a momentum play, okay? I'm playing the momentum of this and the correction afterwards, which is visible on, you can see the correction on the daily. It's visible on the daily chart and the highest lower time frame, so the 4-hour chart. So I'm not too bothered about the fact that we haven't reacted from anything of notable value, or the fact that we kind of we moved up in a sequence which is not typical, because we've had a momentum play, a long consolidation, suggesting at this moment in time we're not just going to drop out, and it kind of makes contextual sense because of that. Okay, so but it is lower on my list because we haven't reacted from a significant area of value. Okay, you can see there, and because of how price has moved up, with the sequence isn't typical. It isn't typical for price to do this to start the move. Okay, but regardless, we've completely broken above all of this consolidation now, to a large extent negating a lot of this. Okay, and what I'll be looking for is, this is exactly what I was predicting at the weekend. I predicted that price would just sort of trickle its way there just because of how it was forming. Sometimes you can't explain why that's the case, but when you've seen enough price action, I just saw this and I thought this is just going to trickle its way down to there, and likely the last bit of the move will have a bit of momentum, because that's usually just sellers getting out of their positions, and you can see that appears at this moment in time to be the case. Okay, so what I'll be looking for from this pair, just because of the sequence and because of the fact that we didn't react off of anything significant on the higher time frames, once again, I will not be looking for a 5-minute flag, okay, an independent 5-minute flag. So I'm factoring, my entries are dictated by the sequence and the positioning and the sequence of the setup, okay, and I'm talking about the higher time frames. Okay, I'm not just talking about the lower time frames. So I'm tailoring my entry. So I'm looking for a 1-hour push up. We may push a little bit lower, because if you note here, we've literally just tapped the high, tapped the low rather. However, we have tapped it by way of full bodied price action, not a wick. So that is a positive, but we may break a little bit. This may be a little bit of a trap, perhaps, to catch people, to trap people into the buys too early, where we break below and then push up and flag. I would actually prefer that. But the reason we wait for the correction after the impulse is to confirm that this is not a trap. Okay, and sometimes you wait for a bit more of a correction to determine that it's not a trap. So what I'll be looking for is, I'll be looking for a push up, a 15-minute flag. Then I will set an entry on the break whilst looking for the risk entry within the flag. I will be able to manage it up to the high of the structure for about 3.5%. Okay, and then I would be targeting that high up there. Okay, and then we would have some significant profit potential to work with. Okay, so that would be, what would that be? Yeah, or you could target that one, but I could easily see this following through, so I'd be targeting those ones up there. But that is pound Aussie. I hope you've enjoyed this video, and I will see you again in the next one, which will likely be made this time tomorrow morning. Have a great rest of your day.